everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, this week the market finally started to move away from that 381 level, at least for a day or two, and a lot of what we talked about in the last recording was pretty spot on. Let's look at the charts. If you're new to the channel, don't forget to drop us a like and subscribe to be notified every time we upload a new update. At the time of this recording, it is late Friday evening, early Saturday morning, so the futures market is closed. So let's get right to the chart of the SPY. Just when you thought we probably wouldn't be looking at this zigzag pattern again for a while, it shows its importance once again. Here we went up to that 381 level that you're very well aware of, and then in last week's recording we talked about how the market had used that as resistance, just trading boom, 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 right up to that level all week. Then on the 20th we break above it. And then last night, Thursday night, in our insiders meeting, which is a meeting we do each and every week for our alert subscribers only, where we cover each of our alerts and we talk about the market, said, well, maybe the market needs to come down and test that level before moving higher. And that's exactly what happened in today's trade. You can see, look at the low, 381.84. So does that now work as support for the market to continue up to that 161.8% level at 420? And we'll see early in the week. Looking at the dollar, last week, here's where we were with the dollar, and I mentioned that maybe that 91 level would act as some resistance, that we were pretty close to it at the time of the recording, and then boom, very next trading day, look at that, the high was 90.94, so 6 basis points from hitting that 91 level dead on the nose, and it did act as resistance as the dollar moved to the downside. There's the holiday, moved down lower again, and just a little bit of a bounce back today. And boy, when we look at the charts of the metals, you'll see how lockstep they are moving with the dollar right now. It's pretty amazing. But before we get there, one thing I want to show you is this is now a qualified zigzag here, meaning that wave 4 might not be done. We could have an extended C wave up to that 100% level where the wave 4 corrects a little bit further before marching down towards that wave 5. We'll know pretty quick. If the dollar moves below the 61.8% level here in the B wave, then we'll know, yes, we are in the wave 5 on the way lower. So here are the metals. As I mentioned, there's gold, and look, just that little bit of a bounce in the dollar today, just enough to push both gold and silver to the downside in today's trade. So looking at silver, we talked about this before. We had this nice triangle pattern, and as Elliott triangle rules tell us, you break down, you come back up, test that level. So here was the testing of that breakout point with the doji right there. We headed lower. Silver was marching back to the upside until today's move. Now when we look at the moving averages with the metals, it's pretty interesting because the major moving averages are all converging, at least the ones I look at, the 10, 30, and 50. They're all coming together. It's not really a great triangle pattern, but yet silver is consolidating right with those major moving averages. Well, look at gold. It's even more of a consolidation with those major moving averages where they're in a tighter consolidation. And we're underneath this 175 level here, which for whatever reason is a pretty major point of support resistance, as you can see how many times it's bounced off of it and bounced underneath it. So I don't know what the significance is of that level, but it matters for gold at this point in time. So the dollar is going to give us the cue on where the metals go in the not too distant future. Bitcoin, here's where we were last week. We had mentioned that it needed to consolidate after that big move. It did. We mentioned that it was in an Elliott wave, really nice looking symmetrical triangle pattern. So the key is, where do we go? Were we going to break to the downside out of this pattern and create a wave 4 correction before heading up to the wave 5? Or were we going to just break to the upside and head up towards that wave 5? Well, let's take a look at what's happened in Bitcoin since the last recording. So it actually did trade on the holiday. So there's Monday, Tuesday, Wednesday, Thursday, breakout day. Or is it? Remember, when you have a breakout of a triangle or you break a major moving average or a support resistance level, whatever, you have to have a second day, a follow through or confirmation day. And we didn't get it. Bitcoin moved back to the upside. A couple things could be going on here. This could just be a head fake. Shake out the weak hands in Bitcoin and we break to the upside and run up towards that wave 5 target. Or it could be a test of the breakout and we are heading down to that wave 4 level. First couple of trading days of the week will tell us a lot as far as where the next major move in Bitcoin goes. Looking at interest rates, talked about this last week as well, how they had gotten a little bit away from the 10-day moving average and did the whole sing along with me on the 10-day moving average. But the key here is still forming triangles in both the 10-year and the 30-year. Here's the 30 here with its triangle pattern. And then we look at the 10-year, and you could kind of draw this one a couple different ways. You could draw this triangle here, this way, or you could make a case for more of a descending triangle formation. Doesn't really matter. It's still a triangle. It means interest rates are about to make a pretty decent break. Which way do you think they're going to break? Post a note in the comments section. Let us know where you think interest rates are going to go. I think if you looked at the economic situation that we're in, you'd have to say, things are so bad they have to break to the downside. But they don't have to do anything with triangles. Elliott would say if you have a triangle in a wave 3, it's more likely to break to the upside. I like to look at it from a trader's approach, meaning that when you have a triangle, why pick a direction? Cover both sides, which we do with our unique triangles that we set up. Don't care whether it goes to the upside or the downside, just as long as it moves. It certainly looks like these are getting ready to move. Now, let's say they do break to the upside. If interest rates do start to go higher, where would you put your money? Continuing with our themes that we said that we were going to do as far as where you may want to consider rotating your money for this year with the new administration, one area that does well when interest rates go to the upside is consumer discretionaries. This is the XLY, which is exactly why we have our alert subscribers in this to the long side, expecting the XLY to continue higher. Now note, we're at the 3% extension level. So the wave 5's done what it's supposed to do. We had our wave 5 pattern, 100% extension. Do we go to the next fib level, 161.8? Well, when you have an Elliott wave pattern that's done what it's supposed to do, hit its target, and you're looking to see, does it extend? Does it move to the next fib level? That's when we bring in our confirming indicators. So we bring in our confirming indicators here, and looking at the DMI, which is my favorite of the ones that we look at, you can see that we have a set of higher lows there in the ADX. It's not the greatest separation between the two directional indicators, but they are separated, and the ADX is above 20 and between the two directional indicators. So from that standpoint, it does look like there's support for the XLY to continue higher. Now, last week, one of the areas we talked about a consideration for this year was in the cannabis section. With a more liberal administration, stocks are probably going to do well. A lot of them are doing well, I'm sure you're aware of. So we showed you the ETF rather than just picking one individual one, the THCX. But last week we were pretty vertical. Again, the same theme, separated from the 10-day moving average. So we said it needed to consolidate. Well, here's what THCX has done since last week, and exactly what you would expect it to do. Came back down to the 10-day moving average, almost touching it on the low today, a little bit of a doji, so maybe THCX is getting ready to break back to the upside early in the trading week. It'd be interesting to see. Just thought I would update you there since we had talked about it last week. Last but not least, looking at the VIX, you can see we had this triangle. Again, here's where we were last week, and we said with the VIX trading and the point of the triangle up around 23.24, that did allow a little bit of room to the downside if we wanted to break lower. And there's the holiday, and boom, there's the breakout day. Little bit of a follow-through day. Not the greatest follow-through day, but you could count it. A doji there at the end of the day, and so back up to test the breakout. Pretty normal stuff. We did close back below that lower trend line, so that's important. So a break to the downside out of the VIX obviously allows for more support for the S&P to move up to that 161.8% level. So as I said in the intro, Our analysis from last week was pretty spot on. So give us a like on this video, or better yet, hit subscribe and you'll be notified immediately every time we post a new video. Thanks, we appreciate it. Hope you've had a wonderful week. Be back to talk to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.